break-even point, alright? Because at this point, your sales is equals to total cost, alright? And this point is dollar. So the idea is that here, that point is your unit, right? And this point is your dollar, all right? So if you're looking for sales in dollars, then these points will tell you that if you generate that revenue, you're gonna have no profit, no loss. And if you look at vertically, so that point is your units. If you sell those units, you're not going to suffer any kinds of, you're not going to bear any loss or any profit. All right? So, but remember, this point is your profit. All right? And these areas for your loss. All right? So here is your profit and loss. And if you go beyond this point, of course, here you're gonna, if you sell units more than these units, you're gonna have profit. If less, you will be a loss. That's all about your graphical representation of break-even point. Right? So now we move on to the next learning outcome, which is margin of safety. Now, what does it mean, margin of safety? Margin of safety is that point if your sales drop from that point, you're going to suffer a loss. Alright? I repeat again. Sales go beyond that point, it's called, that point called margin of safety. So you can see the name margin of safety. So it means you are safe at that point. Alright? So if you go below, then you're going to suffer a loss. So that's called the margin of safety. So your learning outcome 5, margin of safety. Alright? So how to calculate margin of safety? So the formula for margin of safety is a sales or budgeted sales. Budgeted sales minus break-even sales. You know that. How to calculate break-even sales? Learning outcome 4, which is covered in learning outcome 4. Alright? So, it depends. If you want to calculate margin of safety in dollars, then you will use budgeted sales in dollars and break-even sales in dollars. Alright? If you want to calculate margin of safety in units, then you can budgeted sales in units and budgeted sales, break-even sales in units as well. So it will give you the margin of safety. Alright? So better you have a look at the examples, numerical examples that I gave you in the class, and of course given in your lecture slides. So make sure that examples will help you to understand margin of safety in detail. Alright? Now we move on to the next learning outcome, which is learning outcome 6. Learning outcome 6 is basically the impact of tax on break-even computations. Right? Learning outcome 6. So before we talk about the tax impact on break-even computations, here I want to explain you about the target profit first. Alright, target profit. Now what does it mean, target profit? Target profit is that profit that company wants to achieve, the company target, to earn that money as a profit. Alright, and of course, it's a profit. Right? So, if you want to calculate a target profit, so what is the formula? So the formula is a total fixed cost plus target profit, and TD stands for target profit, divided by contribution margin ratio or contribution margin per unit. Right? So whatever number you got it, that number means if you're gonna sell those units or if you're gonna generate that revenue, then you will achieve a target profit. Alright? I repeat again. This formula, with the help of this formula, we're gonna get some value here. Alright? Maybe we're gonna get this value probably in units or in dollars. Alright? So we're gonna get this number in dollars and in euros. It means if you're gonna sell those units, you're gonna achieve a target profit. Means you're gonna earn that profit. Or if you earn that revenue, then you will make that profit. Alright? So it depends. If you want your answers comes in dollar, then of course you use contribution margin, same like as your learning outcome 4. And if you want your answer comes in units, then you will divide by contribution margin per unit. Alright? So that's all about the target profit. Alright? But here the thing is, when we talk about the target net profit means this net profit after tax. Alright? Net profit, net income, when we talk about net profit means net profit after tax. So it means, what does it mean? It means if you wanna earn that profit after tax, you have to sell those units to have a net profit after tax. So means you will have to sell those units to cover your tax as well. And that sound doesn't make any sense. Why? Because tax is every year, tax is not the fixed. Alright, the tax rate is the fixed if government doesn't change, doesn't make any changes within a year. Tax rate is fixed, but of course, tax payable not going to be the same. It depends upon the company profitability. So if taxes depends upon the company profitabilities, then when we are estimating this number, we have to exclude tax, right? If we're not going to exclude the tax, so it means whatever sales volume we're going to sell, or we have to sell this sales volume to cover our tax in the profit, and then we can't do that, all right? Because if we are maximizing our sales or sales quantity, then our profit will be increased, net profit before, and of course we have to pay more tax. So it doesn't make any sense that we have to generate more sales to cover the tax. That doesn't make any sense. But if you say that we have to generate more sales to cover our fixed interest rate or interest that we have to pay to bank, that makes sense. Because interest rate not going to be changed, the interest we have to pay to the bank. Whatever contract we sign with the bank, we're going to use the same interest rate to pay that money back to the bank. Right? But it doesn't really happen with the government because we're not going to sign a contract with the governments to apply the same tax rate or same tax amount every year. Alright? So that's why it's not quite relevant or quite logically to apply the profit after tax. So the idea is that whatever profit is given here, we have to convert this profit into before profit. Means we have to convert after into before. Alright? So we have to fix this formula here. Alright? So if you want to convert profit after into before, so the formula is a profit divided by 1 minus tax rate. Alright? Alright? profit divided by 1 minus tax rate. So I'm going to fix this one here. So profit divided by 1 minus, so target profit or profit, so better I use the word target profit because it's a target profit that we want to achieve it. So target profit before tax, alright, 1 minus tax rate. So then whatever value we gonna get in here, that value will say that if you will sell this quantity, then we're gonna have a profit before tax. And then of course whatever profit we have will be applied the tax rate, and then we will estimate the net profit after tax. Alright? So that's the ideas behind learning outcome 6. So this is the formula, make sure you apply this formula. Alright? So that's all about learning outcome 6. Now we move on to the last learning outcome, which is different decision making, alright, or kind of special decision that company have to make in the organization. Alright. So here we're going to talk about 2 kinds of special decision company needs to make. So the first one is a one-time special order, right? One-time special order. So let me take some examples. Okay. So, one-time special order. One-time special order means, for example, your company produce a marker, right? So that is your main product or regular product, right, that you sell to your regular customers, right? So one day, one customer